What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this evening. So what we're going to be covering in this update video is a little bit of the Ortex data, what we're seeing on the options chain after this very significant red day, and then we're going to go over a couple of things that I've seen that I think are very, very important for you guys to know. We are going to be bringing up this concept again of forced share recalls. Now, there's this situation going on with Credit Suisse right now, and what they're doing with their division that it was essentially their prime brokerage division that was lending out and providing leverage to a lot of these hedge funds. And they are going to be closing down that division. So we're going to go over the details of that. And then Ken Griffin's CITADEL over in, I believe, London in the UK have taken very, very, very significant losses on some of their airlines bets. So we're going to go over that as well. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So AMC closed the day $22.75, down 10.75%. This was an absolutely bloody day across the markets. Now, we did see the overall market, IWM, having significant sell-offs, the SPY, QQQ. So a lot of the market was selling off, but did AMC really deserve to sell off 10, 11, even 12% at any one given time? Absolutely not. We saw Cinemark green on the day at one point, which when you think about the whole movie theater industry, with AMC being the largest theater chain operator, doesn't make a whole lot of sense for them to be significantly in the red while these other movie theater chain operators are in the green. Now, we are bouncing up a little bit in the after hours, but again, going into the end of this week, I would not be surprised if we saw some more downside near the more recent lows that we have seen at around $20.27. If the market is going to continue to bleed out throughout the end of this week, that is a possibility that we come back down. But again, guys, remember what happened the last time that we got to those levels? We rallied right back up. If they're going to be lowering the danger zone by trying to continually short AMC at these low levels, that next rip up could be very, very dangerous on not only the options chain, but for the average price that a lot of these newer shorts have gotten into. Now, coming over to the Ortex data over here, let's do a quick refresh so we can get the most up-to-date data. We have utilization at 75.85%, estimated short interest 17.14%. We had a net borrow today of 415,000 shares and pretty low cost to borrow. Now, one thing that I do want to show you guys is this average days on loan right here. It has started to curl back up, but it is starting to kind of taper down a little bit. The momentum of the average days on loan coming up is slowing. So what that essentially is going to tell us is that the shorts are starting to pile back in. They are starting to kind of chase the price of AMC down, which eventually, once we start to trend back up to the upside, is going to benefit us. Now, taking a look at the options chain over here, let's give this a quick refresh as well. We have 101,000 call contracts in the money. Again, like I have been saying, it's going to be very, very difficult for them to get a lot of these call contracts out of the money since a lot of them are concentrated deep in the money. There's 500,000 contracts out of the money, and with the price action that we've seen with AMC continuously trending down over the last couple of days, well, it would not be surprising that a lot of people are going to pile into strikes that are lower and closer to where we're currently trading at, again, creating an even larger gamma ramp going forward. Now, let's get into this situation with Credit Suisse. So when we move over here, Credit Suisse to lay off New York employees as it shuts hedge fund division. Now, this isn't necessarily their own hedge fund within Credit Suisse. We can see Credit Suisse is starting the year on a sour note, with the banking disclosing on Monday that 69 New York staffers will be shown the door. The pink slips are in a division that served hedge funds and which is being wound down after Archegos Capital Management collapsed last year, sticking the bank with a $5 billion loss. New management vowed to stop lending to hedge funds or processing their trades, a typically lucrative business dominated by Morgan Stanley, Goldman Sachs, the largest one, and JP Morgan. Layoffs at Credit Suisse will begin on March 6th, according to a filing with the New York State Department of Labor, and the Prime Services division will close by August. The bank declined to comment. So Here is the interesting thing that I want everybody to fully understand. So this is essentially the prime brokerage division at Credit Suisse. What does the prime brokerage division do? Well, it facilitates the loaning out of shares, and it also facilitates providing leverage to a lot of their clients. Credit Suisse is known for getting into trouble with letting their clients basically lever up too much, and that's why they were the big loser in this Archegos capital management situation. So follow along with this line of thought. Credit Suisse is going to do business with a lot of different hedge funds, and they've been loaning out a lot of shares and providing a lot of leverage to these institutions because that is what the prime brokerage the prime brokerage division is going to do. Now, it is possible for these hedge funds to move some of their exposure and positions over to another bank, but think about this right here. If Credit Suisse is a banking institution that notoriously allows their clients to take on too much risk, why would Goldman Sachs, Morgan Stanley, or JP Morgan want those positions on their books? They wouldn't. So here's what could end up happening and is a very likely scenario going forward. Credit Suisse is going to recall a lot of the positions that have been loaned out and the leverage that they have provided to their clients. There could be a massive wave of deleveraging, and we could see a lot of stocks start to sell off when we see a lot of these block trades go through, or we could start to see a lot of stocks that have a high short interest start to rise because Credit Suisse needs to close out a lot of these positions and these loans that they've been giving out that are on their books right now. This is a situation that we need to keep watching going forward because it's incredibly important. If Credit Suisse is going to perform a massive forced share recall or basically taking back the margin and the leverage that they've given out to a lot of their clients, that is going to move a lot of stocks in the overall market. Now, when we think about how this could affect AMC, well, if Credit Suisse was loaning out a lot of AMC shares and they are going to have to perform a lot of these forced share recalls to get these positions off their books, well, they're going to have to send out the recall notice. The hedge funds who have been loaned these shares that are shorting are going to have to buy those shares back and return them to their rightful owners at Credit Suisse. And that could lead to a lot of buying pressure that is going to come back into AMC once we see this whole Credit Suisse hedge fund situation start to finalize. Now, the last thing that we need to talk about is this situation going on with Ken Griffin and this bet on airlines that kind of went awry in the UK market. So when we come over to this article right here, hedge fund king Ken Griffin loses millions on a British Airways bet. One of the world's wealthiest hedge fund managers has lost millions of pounds after shares in the owner of British Airways took off. Ken Griffin, a Chicago-based financier worth more than $21 billion, placed a multi-million pound bet against IAG just hours before new data revealed that the new variant had not dented airline bookings. Two of his funds held a 1.66% short position, a bet of about 130 million pounds against the BA owner. IAG shares jumped more than 11% on the first working day of the year and made further gains on Wednesday. This is a very significant loss. The stock is trading at 160 pounds, valuing the company at 8 billion pounds. Mr. Griffin's Citadel was not the only hedge fund to be hit by renewed optimism about the fortunes of the airline sector. So what we're seeing here is, and something that I really want to get across to everybody, is that these funds, these really large institutions with a lot of money, they don't have the power that everybody thinks they do. If Citadel really wanted to force the prices of this airline down, they would have done so, and they would have made a bunch of money on their short position. They would have taken their money out and moved on to the next, quote, manipulative investment. Now, a lot of people like to think, especially with what we're seeing on the price action of AMC recently, that yes, they can push the prices down and they can essentially do this forever, but that's not necessarily the case. We have seen in the past AMC rip up out of nowhere, and I do think that is very, very possible going forward yet again. We have a nasty options chain setting up. We have a lot of people looking to buy the dip at these lower prices to lower their average share cost. And I still think that overall, the fundamentals of AMC continuously increasing. They are lowering the danger zone, and all of the things are pointing to sort of a last-ditch effort of these shorts really trying to push the share prices of AMC down. So that is mainly going to wrap up this update on AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great evening, and I'll see you guys in the next one.